All right, thank you, team, for another great week of laying it out all on the court for our community. And Christopher Aaron, welcome back to F.A.C.E. How are you, buddy?
Hey, Dale. Doing all right, man. How are
Uh,
you?
Good. I'm glad you remembered, and I want to acknowledge that the last time you were on, you talked about silver having broken a formation, a structure, that you had a $19 objective that was a real good contrarian call at the time, and do you still think we're going there?
Yeah, thanks for remembering that. Unfortunately, I still have nothing to negate that lower target for silver. The specific target would be 1845.
Okay, are you going to share your
It,
screen, Chris?
yeah, let me do that. Let's
Okay,
see here.
you could put up the
Um,
video if you want to be on TV.
yeah,
Use the
let's do
video.
that too.
Oh yeah, okay.
Oh, what does it say here? Can't start your
Sure.
video because the host has stopped it. It's telling me.
On share screen.
Oh, there
I'll
we go.
try. Yeah.
Yep.
Okay.
Can you
Okay.
see my screen now?
Got it.
Great. So, I actually wrote an article on this just the other day that I think people would be fairly interested in. It's over on a site that I do some work for, Silver Phoenix. Let's see. So here's the article, and I'll take you through it. Not the article, I'll take you through the analysis in real time here. But I just want people to see it if they would like to see it in written form. Silver price forecast: a major low is close. So here's the thing: we are. Let's bring up the silver chart now. We still have a reasonable expectation that there could be that lower target. We're looking at the 10-year chart right now for silver, and the target was derived. If I zoom in here,
Yeah, by that broken trend line.
exactly right. And so you
Yeah.
had this triangle right here with the turquoise. I use turquoise to denote broken trends, and blue is still valid. And so when we broke this right here, it was the amplitude of this triangle. It was $8 and change from the breakdown point, gave us a target down here at 1845. Now, so I have nothing to negate that yet. I will say that there was a bullish reversal in here when we saw the attempt at the breakdown. This is like a year and a half now, almost a year and 4 months. Support here above 21.
You had a false breakdown, and it did look like it was going to go. Everyone was calling that a head and shoulders formation, the bottom, head and shoulders bottom, and then it broke out and then negated the formation, right?
Yeah, that's exactly right. So we're in what's known as sort of like chop land right now, chop zone, where every attempt to move lower is getting negated. The attempts to recovery are getting negated. It's just going to chop and grind for a little while here.
Where's your blue channel line come in, Chris? Say, this is what, a monthly or weekly?
This is a weekly chart that we're looking at right now.
Okay, so approximately where's the bottom of your blue channel coming in, like now, and then you could extrapolate it out.
Yeah, so right now it would be down here. Let's call it 20.
That's what I'm looking for.
Yeah. And then, so the thing is that my targets don't have to get hit precisely to the cent. What we're talking about here is it looks like, and it doesn't have to be right now. There could be one more bounce here for the next month or two.
To 23.5, maybe.
Yeah, there you go.
Yeah,
and then then it looks like silver wants to do one final kind of plunge. I could see it even doing something like registering below 20, get all the bears out saying, see, silver fell below 20. And then that marks the absolute bottom. But the bigger picture that I was talking about in that article that I just brought up, that I'm trying to have people remember here, is look, we've already fallen from 30 down to 22 and change. So it's an $8 decline. If I'm
Yeah.
saying max, there's another $4 downside, and probably more realistically, it's like, $2 or $3 downside. Most of the downward move has already happened right now, but this is where people are now abandoning the sector, and it's the exact
Yeah.
opposite thing that they should do.
Right.
Um,
Yeah, it was 9 on the DSI. That's a daily sentiment indicator. So that's a
is that
very
right?
low reading at one point this week. 9. It's 12.
It's
It's hated
it's
again.
totally hated.
Yeah.
The only other times that I remember seeing this over the last decade were back in this low in 2018. It was very hated, and then back in the major bottom late 2015, it was super hated. So,
Yeah.
big picture, the thing for people to remember is what's happening right now. We had this basically like a 7-year base. You had a terminal wedge that first formed, and then just a slightly downward sloping channel. The big breakout was here in March of 2020, April of 2020, excuse me, into the second quarter. This breakout in here, this impulsive break above the previous 7 years of basing process. So you had a breakout. This is like the first step forward. All that's happening right now is we're coming back to basically functionally retest the 7-year base. That would be very normal, very healthy price action. We're basically in the window here. I would say you got maybe 6 months or so. It's hard to say the exact timing, but you're in the window to be loading the boat on, let's say, a retest of this base, because then the next move takes us up here to 35, 36, 38 for starters. We'll talk about, when later on in this decade are we going back to 50. So unfortunately, the psychology is the exact opposite of what it should be right now. Everyone was super bullish up here at 30, and everyone's abandoning it here at 22.
When you were talking, Chris, about, numbers that you come up with, they don't have to be hit exactly. You're not Nostradamus. Write this down. Don't expect perfection at the crap table.
Yeah.
You know what I mean?
Or
close enough for government work.
But the thing is, some people, when you don't get it to the cent, they say, throw out the entire system. Therefore, technical analysis should be thrown out entirely. It's like
evil, man.
Right.
Witchcraft.
It's like, look, you have to stick. You have to work on a discipline and say, it's like driving a car. You're never right in the middle of the road. You're never perfectly on your route going to your destination. Does that stop you from getting in the car and attempting to get where you need to go the next day? It works most of the time.
Yeah. Okay. So accumulating, how else, besides the physical, you do anything in the minors?
I sure do. I do a lot of work in the junior space of the miners.
Okay. It'd be interesting to see what you're looking at. Junior is past the exploratory stage. They're developing the mine now. They found it. They're going after it. Right?
Yeah. You know what? I do everything from exploration through development.
Okay.
Right now, I have to say that I would favor the advanced exploration and development stages of the spectrum. It's just so undervalued relative to where silver is. I don't have that chart here in front of me, but a lot of the junior silver miners are trading as if silver is still 16 or 17 bucks.
Okay. You have a couple symbols.
If you compare, let's see.
Because are any of them in SILJ?
Yeah, SILJ actually tends to have some of the more mid-tier, even though it's called the junior fund. It's really more like a mid-tier fund. But if you check out, for example, Southern Silver Exploration is a good example. It's trading well below its 2016 peak, even though silver, as you can see, is well above its 2016 peak. And has there been dilution in that stock? Yes. Symbol for that one is SSV on the Canadian Venture Exchange, or SSVFF on the US OTC.
They play lots of games with paper on these.
They do, but they also have been expanding their resource the entire time. So, there's risk everywhere. But if you can have a company that's, as they're issuing more paper, they're adding more metal to their balance sheet. That's just one. I'm not actually invested in them right now. That's just one that came off the top of my head. One that I'm interested maybe in my service is called Brixton Metals. Is a company that we've just initiated a position in. BBB.
Where's that traded?
BBB is on the Venture Exchange. It's the primary.
Oh, okay.
And BBBXF.
Is that what used to be the Vancouver Exchange?
Yes, that's right.
Okay. So have you ever been bitten by a barracuda or a shark in that on that trading floor? Anyway, I'm just saying that maybe it's changed. I mean, Vancouver had a terrible reputation. Remember Bre-X? They threw some guy out of the elevator, helicopter. Anyway,
but that's why proper diversification is key. I mean, anyone who had 100% of their money in Bre-X deserves to have lost everything. You know?
Okay. Yeah.
But if you have no more than 5 to 10% of your mining portfolio in one name, and your mining portfolio shouldn't be 100% of your overall net worth. So therefore, each position is a couple percent max. Yeah.
Okay. You're a pretty disciplined guy. So I know you talk a lot about the metals. So do you advise on other asset allocation? Are you involved in the equity markets, crypto? Because you've mainly been talking, I know your handle is, precious metal related, but it sounds like you're doing other things too.
I do focus on the precious metals and then the rest of the commodity space. So I'll get into copper, into energy, to some extent, into some of the industrial metals.
Commodity
I do not
related.
offer financial advice. So, but it is what I am doing and what I would do in one of my clients' situations, the research and the analysis to back up what I would do if I was in your situation.
I see. And the dollar you think is peaked or peaking? I see you brought that up.
Well, actually, I heard you guys talking about the euro. So let me bring up my euro chart. What's happening here?
You have some lower targets I see there, 105.20, 103.39.
So this is what I got for the euro, and what I think you're going to see here is something that no one else is presenting. If we go to the big picture monthly, so look at this. We're going back 1975, right? 1975 through, this chart ends in 2060. Okay. So you're looking at, an 85-year timeline here, euro to USD. And the USDX is going to move generally opposite the euro because the euro is over 50% of the dollar index.
Right.
So I know there's a lot of dollar bulls out there. They've generally been right for the last decade, but I don't think too many people are looking at the long-term chart. What you got here with the long-term chart is a very clear ascending triangle from the magenta to the black. This is ascending. There's a slight expansion here of the support zone, with relatively flat resistance. And by the way, before 2002 here,
that measures 2.25 on a breakout over 145.
Exactly right. And before 2002,
I've done a little chart analysis. I know a little bit about charts.
Oh yeah, I would say so. Yeah.
Yeah.
You got my targets before I even say what I'm looking at. So
I'm sorry.
You know what I'm talking about. But so the this is the big picture. You've
I
got an
like it.
ascending structure here. Now, this probably is not going to break out above the black for good until sometime in the 2030s. But so if you take that and then you say, I'm not used to doing it live like this, so it's a little. There we go.
Yeah, you're doing great.
So then if we zoom into the structure of the last several years, right? And well, let's call this the last 13 years, that last structure. So remember, we're talking about this structure from this peak into the lows that we're in now. So let's zoom in, and you notice very clear 12-year downward structure breakout right there where my mouse is. And then what? All we're doing is coming back to retest the breakout.
Yeah.
Slightly lower levels, and that can happen. So oftentimes people think when there's a breakout, you got to start a new bull market immediately. That's not the case. So Euro has broken out and now is expected to be in the process of distancing itself from the former downtrend. That takes a few years to play out. And then you start the next rising trend, which, I mean, at minimum, we're going to be talking 150 to 160. But like you said, Dale, I mean, eventually in the 2030s or 2040s, this is talking about over 2 to 1.
Yeah. Yeah. Okay. So, I mean, guessing the time of when, things manifest, that's very, difficult to do.
Yeah, it is. It is. It's just basically, so the reason, if you understand where we are here with Euro USD, and then you kind of start looking at, as I said, I focus on the rest of the commodity sector as well. We can use, we could talk about the CRB index. We could talk about where crude oil is right now. I mean, I'm not bullish on crude for the next maybe year or two. I think it's going to grind and chop and maybe grind back into the region of 40 or 50. But long-term crude, look at what has happened here. Massive 12-year wedge pattern. This is the peak in 2008. There was the low when it went negative in the coronavirus. And this wedge has broken to the upside. As I said, oftentimes a market needs to consolidate for a few years after breaking a long-term downtrend like that. But what's setting up here for mid-2020s and later is a bear market in the dollar. Let's go back to the dollar index. It's going to be inverse of that euro that we talked about. You've already broken the rising trend from 2008, 2011. We're going to stay below the rising trend here for the next year or so. It's going to work its way back into the region of 100. You're going to form something of a triple top here. Remember, it's the opposite of the euro. You're going to form a triple top. Eventually, you're going to roll over, break this blue trend, and the dollar will start a bear market. That's going to be the impetus for silver. Talking about crude, gold is going to lead
commodities,
the way.
everything.
Commodities. That's why I focus on it. And yes, a lot of these juniors are tricky companies to work with. You have to be very careful. I talk to management of these companies. I spend a lot of time on the phone with them. I get on a personal basis with a lot of these companies. You have to be super careful.
Gumshoe, where you get to know the owners. I think that's great to talk to management.
Yeah. But I mean, that's the setup. The big picture setup is that into the middle part of this decade and beyond. Actually, basically, getting back to silver, I think silver is a great proxy for what's about to happen here. There's another 6 to 12 months, perhaps, of grinding that needs to happen here. And the backdrop fundamentally why this needs to happen is that the market is caught between the inflation that we're seeing and the belief that the Fed taper, the bond taper, and potentially hiking interest rates a couple times next year is going to end the inflation. And I think as soon as the stock market has its first freak out at higher interest rates, you're going to see the Fed do an about face.
Right.
They're going to say, oh, sorry, we said we were going to taper the bond program. We said we were going to raise interest rates. Maybe we got, the Fed funds rate up to 0.25% or something like that, some absurdly low number. And they're going to say, that's it. Now we're easing again.
Let me ask
And
you
I
this.
think then
It's easy to understand a weaker dollar and higher commodities. Most would think that when you're talking about the stock market selling off or panicking before Powell reverses again, would think that the dollar would rally in a flight to safety, but isn't it possible that a bear market in the dollar could also translate into a bear market in stocks? Because who wants to own any US dollar denominated asset? Maybe they move to bourses offshore that could take advantage of the dollar weakening, and US underperforms the rest of the world. What do you think
totally
of that?
right, Dale. I appreciate your perspective as well, because you've got a good sense of the history. Most people tend to only look at the most recent crash and therefore say that the next crash is going to be exactly like the most recent one.
Yeah.
But so they'll only look at, let's say, the coronavirus panic, or they'll go back one more and they'll look at the crash of 2008 and they'll say, well, people fled into the dollar in the crash of 2008. Fine. Go back to the post NASDAQ, crash, or go back even further to the silent inflationary crash of the 1970s, where you had multiple 50%, 40 to 50% bear markets in stocks within about 12 years. So, and that entire time you had a falling US dollar and rising commodity prices due to the inflation.
Right.
So I think it's very perilous. It's really a lack of
history.
Exactly right. It's defaulting to the most recent example out of, I just think it's it's laziness. It's not doing enough research on historical cycles.
Okay. So I want to thank you for being here, and I think you and I have kind of the same viewpoint going into 2022. It's just getting the timing, at least being close or reducing leverage or having no leverage, and begin to build positions when we get to certain levels. So I respect your work, not just
Thanks,
because
Dale.
you agree with, not just because you agree with me, but looking at that ascending triangle you showed on the euro. I thought it could go to $2, but now I have a visual on how it could, and you shared that with us, and now I see it. So thank you for your contribution to my game plan.
Yeah, thank you. Let me ask you, Dale, what is your anticipated timeline for, let's say, the bottom in silver?
I think it's within the next 60 days, along with
okay.
And because I think the dollar high is within the next 60 days.
Yeah.
I'm thinking
so you're
98.
Okay. So you're a bit sooner than me. So, it's fine. We don't have to
But
agree
I'll tell you something. I'm always early, Chris.
Yeah.
All right. So I go in light. That's what I'm saying. You could begin to build positions without leverage or reduce leverage, and just, sometimes the longer it takes to develop, the bigger the position you can build.
Yeah,
Then
that's
if it
exactly right.
happens, like on the COVID crash, if you didn't act that day, you kind of missed the first 20%, 30% of the move.
Right.
So anyway, I appreciate it. I want to wish you happy holidays, Merry Christmas, Happy New Year.
Thank you. You as well.
And the best way for people to follow your excellent work is
they
Twitter.
could just find me on Twitter. It's the letter I and then globalgold.com. iGlobalGold is the Twitter handle, and the website is the letter I and then goldadvisor.com.
Do you think gold could see 1,600 in this process?
Yeah, what I'm looking at for gold itself is, if we just look at the most recent structure out of the 2018 bottom, It looks to me like it wants to crack this first
Yeah.
attempt here at this recovery. It looks to me like it wants to come back to the black one more time.
Yeah.
Which is so maybe not 1600, but I'm thinking around 1650 to 1685.
Okay. At least enough to take the stops out. That's a big prize, liquidating out the sell stops under 1678. People will flip to bearish down there.
Yeah, they sure
Oh,
will.
and Forex Gal saying all we need is a direct line to Jamie Dimon at JP Morgan, and he'll tell us every wiggle that the gold market's going to make.
That'd be
All
great.
right?
Then we'll continue this conversation from our yachts, in the
Yeah,
Caribbean.
we'll do that. And Jamie had to walk back his comments on China, so he's not as big of a big shot as I thought he was.
Yeah.
Okay,
just
go
on the
ahead.
topic of gold, if I could show people one more chart. So we were just looking at gold in US dollars. That's that, right? It's still not a bullish chart. It's sort of a grinding. It's still a grinding consolidative chart.
But in other currencies, it's flying because the dollar's been strong, right?
Yeah, and you know which one I follow the closest of all is gold and Japanese yen.
Yeah.
For the reason that gold and Japanese yen were basically functionally equivalent for about a decade. You go back to this, 2011, 2012 through 2020.
Yeah.
Anytime you have a chart that's consolidating like this for almost a decade, it means the market was treating these as functionally equivalent. And then we saw this massive breakout. Now, the thing is, it looks dramatic. We're looking at a linear scale, but you got to ask yourself a question. If a market's consolidating for a decade, is a move above the previous all-time high 157 to 200? That's only that's only a 35% move. Is that enough? Is a 35% move enough after a decade of consolidation and a breakout? I don't think so.
I don't know.
So you look at, you just zoom it in here, gold to Japanese yen, and you look at the structure from, the breakout back here, 2019, and look at just what happened here at this peak. It exceeded the peak from May of this year. This peak in US dollar terms was that 1920. So gold and Japanese yen just exceeded that peak, now look, you're breaking the structure again, the most recent attempt at a structure. So what it's telling me is that gold and Japanese yen needs to maybe come back to 195 or 190. It needs to, this entire consolidation is going to be 2 to 3. I mean, we're already almost 2 years into it. Maybe it needs one more year, but you've broken above that major swing peak here already, gold and Japanese yen. This is not a bearish chart right here. This is a chart
like a handle.
It's a beautiful cup looking handle. Exactly right.
Yeah.
So you look at that as the currency that was the safest currency in the world for the previous decade.
Yeah.
Gearing up, maybe for a 2022 breakout. And I'm telling you, gold in US dollars is only going to be about 3 to 6 months behind gold and Japanese yen. So gold in US dollars needs to do its thing. It needs to frustrate some more people here. And then it's going to be ready, probably late 2022.
Okay, buddy. We'll be talking before then. So, Christopher, thank you very much. You're my trading warrior brother, and I root for you.
Sounds good, Dale. I really appreciate being with you, and all the best to you and all the listeners.
All right, buddy. So that's it. Peace. Don't just count your gold bars, count your blessings. And thank you, Chris. Paul, have a great weekend. Everyone have a great weekend. Thank you, Laura. I'm glad you enjoyed it, Brock, Ingmar, and you could join the team in 12 minutes for the morning edge. See you guys Monday. Have a great weekend. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.